Welcome to the Deep Dive. Today we're doing our final deep dive of 2025, and we're tackling a big one. Micron Technology, symbol MU. We've got the technical reports from the very last day of trading.
Yeah, and these reports can be a lot. I mean, dozens of indicators, all these data points. Our goal today is to really synthesize all of that, to filter out the noise.
Right, we want to build a clear picture of where MU stands. So let's start with the basics. The closing bell for 2025 rang with MU at $287.56.
And the headline for that day was a little bit of a pullback. The daily return was down 1.73%, so a bit of a soft close to the year.
And this is the really important context, you can't just look at that one day. I mean, where was the stock in the grand scheme of things?
Well, that's it. That little dip is almost deceptive. The stock's 52-week position was 95.25%.
95%. So it spent the entire year on this massive climb and closed basically right at the summit.
Exactly. The 52-week high is sitting right there at $298.83. So it's right on the doorstep.
Okay, so there's our tension right away. A stock that has just crushed it all year, but it stumbles a little on the final day. Is that just profit-taking, or is it a warning? Let's unpack this with the moving averages first.
Sounds good. Moving averages are really our roadmap for the trend. They smooth out all the daily noise.
And what they show for MU is, I mean, it's just a massive, powerful, long-term uptrend. The separation between the price and the averages is incredible.
It really is. I mean, you don't even need to list them all. Just look at the bedrock, the SMA 200, the 200-day average. It's all the way down at $148.09.
$148. So the current price is almost double its own long-term trend line. That's a parabolic move.
It is, and the ML alignment score confirms that. It's a 3, which is the highest possible reading. It means all the averages are just stacked perfectly, pointing straight up. This is a structurally powerful trend.
Okay, so that's the big picture. That's the foundation. But now let's zoom in on the friction from that last day. What are the shortest-term averages telling us?
So this is where it gets interesting. The price, again, closed at $287.56, but the 5-day simple moving average, the SMA 5, was actually a little bit higher at $289.21.
Ah, so it actually slipped just below its own 5-day trend. That's our short-term resistance.
Exactly, but here's the nuance. The EMA 5, the exponential moving average, which gives more weight to the most recent couple of days,
right?
That was sitting slightly below the price at $286.27.
Wait, okay, let's pause there. So it closed below the simple average, but above the exponential one.
Yes, and that little disagreement perfectly captures that negative 1.73% day. It shows that, yeah, the stock dipped below its average for the week, but the most recent momentum, the velocity, is still strong enough to offer some underlying support.
So the friction is there, but it's maybe not as serious as it looks at first glance. It's a slowdown, not a full-on reversal.
That's a great way to put it.
Okay, so we know the trend is solid. Now we need to figure out the boundaries. How fast is this thing moving, and how close is it to the guardrails?
Sure.
Let's talk volatility and Bollinger Bands.
Well, the Bollinger Bands define that normal trading range. And right now, the price is it's towering over the middle of that range. The BB middle, which is the 20-day average, is way down at $258.48.
And the BB position is 81.97. So that basically tells you you're in the top 20% of the recent trading range. You are not buying a dip here.
No, you're buying high, betting it goes higher. And the ceiling for that bet, the BB upper band, is at $303.96.
Which is very close to that 52-week high of around 298. So the bands are basically saying, look, you're pushing the absolute upper limit of what's statistically normal right now.
Precisely. There isn't a lot of headroom left for a huge explosive move without breaking out of this envelope entirely.
Which makes knowing the daily volatility even more important. What does the average true range tell us?
The ATR 14 is $13.66. That's a big number. It means a typical day's range from high to low is almost $14. The true volatility is about 4.75%.
So a 5% swing in a single day is now considered normal for this stock. Okay, that is definitely not for the faint of heart.
No, it's a high-velocity trend. But what's interesting is how disciplined that trend is. And that's where we look at the linear regression data.
That's right, the R-squared value. That tells you how closely the price is following the trend line.
Exactly. The slope, the LinReg slope, is 1.4, which is very steep. But the really key number is the LinReg R2, which is 0.777.
0.777. For anyone listening, an R-squared that high means that over 77% of the stock's movement is mathematically explained by that straight upward line.
It's an incredibly high correlation. This isn't just random noise or speculation. It's a highly disciplined, almost methodical march upward.
Okay, so the foundation is strong, the trend is disciplined, and it's moving fast. Now for the million-dollar question, is the engine about to redline? Let's get into the momentum indicators.
We can start with MACD. It's a great measure of directional strength. And the ACD line at 15.91 is way above the MACD signal line at 12.41. The histogram is positive. It's all green lights.
Pure upward pressure. And then you look at something like the Aroon oscillator, and it just removes any doubt.
Oh, yeah. Aroon is basically maxed out. Aroon up is at 96. Aroon down is at 0.
Wow.
For the last 14 trading periods, it has essentially only been making new highs and absolutely no new lows. It's the definition of a one-sided market. Buyers are in total control.
So massive confirmed momentum. But we have to check that pressure gauge. Is it technically overbought? The RSI is usually the first place we look.
And the RSI 14 is at 65.12. So it's strong, for sure. Very healthy. But it's still comfortably below that magic 70 line that signals trouble. So based on RSI, it's not exhausted yet.
And this is where it gets so nuanced, because we have a major contradiction coming from the stochastics. This is where the real tension is.
Yes. What's so fascinating is how these indicators look at different things. MACD is comparing longer-term averages. But stochastics, they just measure one thing.
Oh.
Where did the stock close relative to its recent high-low range?
And what are they telling us right now?
They are screaming exhaustion. Both the stock T14 at 92.39 and the stock T14 at 94.15 are deep, deep in the danger zone, way above 80.
Okay, so what does that actually mean?
It means that in the very, very short term, the stock has climbed so far, so fast, that it's run out of room. The price closed right at the top of its 2-week trading range. There's just no more immediate upside without a pullback or some consolidation.
So if I'm understanding this right, the long-term trend, the MACD, says full steam ahead, but the sheer speed of this final push toward the high has triggered all the short-term alarms. It's a warning about the pace of the move, not the direction of the trend itself.
That's it exactly. The market is basically saying, whoa, slow down. You need to catch your breath before you try to take that final hill.
Which brings us to the volume on that final day's pullback. We need to know if that was a sign of real selling or just the market catching its breath, like you said.
And the volume numbers tell a really clear story. The dollar volume was big, sure, $3.22 billion, but the relative volume was low. The relative volume was 0.436.
Meaning it traded at less than half its usual volume.
Right, and the volume ratio 20 confirms that. The volume on that last day was significantly lower than the 20-day average.
So that 1.73% dip happened on very light volume. That's a huge clue. It suggests there was no institutional conviction behind the selling.
Exactly. It wasn't a panic. It wasn't a mass exit. It was probably just light holiday trading. And the bigger money flow indicators, like accumulation distribution and OBV, are still strongly positive, confirming that money has been flowing into the stock all year.
Okay, so this soft pullback pushed the stock right onto a critical battleground level to start the new year. Where's the line in the sand, according to the pivot points?
The central pivot point for the day was $288.35. And the stock closed just underneath it.
So it starts the new year in a slightly defensive posture. It needs to reclaim that pivot to get back on offense.
It does. And if it can't, the first real line of defense, support 1, is down at $283.53. On the flip side, the first target for the bulls is resistance 1 at $292.38.
So the whole fight, at least to start January, is in that tight $8 or $9 range. It's basically a fight to regain the center line and prepare for that final assault on the 52-week high.
So let's pull all this together for you. MU closed 2025 in what is, without a doubt, a dominant, high-quality, long-term uptrend. The structure is just incredibly strong.
Yeah, that's confirmed by everything from the SMA 200 to MACD to Aroon. But the immediate problem is that it's overheated. It's showing clear signs of short-term exhaustion, especially from the stochastics.
Right. And that's what caused that little pullback. The good news, though, is that the pullback happened on very light volume. That really takes the sting out of it. It suggests the market just needs to consolidate a bit.
So the levels to watch are clear. The bulls need to get back above that pivot and then take out $292.38. Their ultimate goal is that 52-week high at $298.83.
And the battle is really between that need for short-term consolidation and the overwhelming power of the long-term trend.
Which leaves us with one final and I think a really interesting question for you to mull over. We have a stock at a very high 52-week position of 95%. But because the immediate support and resistance are so close, the calculated risk-reward ratio is a tiny 0.171.
Yeah, that presents a real dilemma.
It does. So the question is this. In a powerful, confirmed, structural bull market, How much weight do you give to these short-term exhaustion signals and poor risk-reward calculations that naturally pop up in fast-moving stocks? Does the certainty of that long-term trend just override the immediate tactical risk?
That's the trade-off. Strength versus vulnerability. It's a central challenge for MU as we head into the new year. Something to think about.
Thanks for diving deep with us. We'll catch you next time.